Know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the Treasury bonds. I heard a statistic today, folks, on Bloomberg that literally stunned me so much I had to call John Jameson over at the Isle of Man to see if it was correct. For the first 200 years of our country, we accumulated $1 trillion in debt. Okay, that was done about 20-some years ago. Since 2008, when we started quantitative easing with Helicopter Ben, we are making now $1 trillion every 5 months. Our debt increases by $1 trillion every 5 months. We're now almost at $36 trillion. Folks, it's just a matter of time for the rest of the world says enough is enough. Because on that dollar bill it says, in God we trust. But boy, if it ever gets to in God we trusted, heaven help us. Now this is a long-term Treasury bond chart. I'm going to go to the monthly here for just a minute, just to show you where we've come from and where we're going. We just go way back here. You see right here where we were here, this is when interest rates, where bonds were trading at 42 interest rates, or roughly 13%. Then we went up for the next 44 years, we went up. And now we've had a big correction in here. But this is where the problem lies, folks, because people stop taking our bonds and our notes, then it's going to be over for us. Look at this. This is when they told us we were going to have quantitative easing with zero interest rates. Remember that one? What a smart deal that was. Anyway, that's really scary. Stop and think of your own. If you're trying to run your own household on credit, and well, that's not really fair, because the United States, even though they have the trillions of dollars, it has a lot of assets with their armies and navies and air force and planes and all the land that they own and all the assets underneath the land and gold and everything else. So there's a lot of money that we have, but for running the country, boy, it's getting a little scary from that. That's why the bonds, you can see here, we didn't hold that level that we thought they was going to hold. It went through it like it didn't even exist. It took a 10-tick loss on that. It did get down to 118.05, which was nothing more than the 1.618 expansion of this move right here. That's what stopped it. All it could do today was to rally to 1831. Let's just go to an hourly chart and see if that was a 382 on anything. We'll just move this over and we'll see if it was a 382 off of the last high that we had back in here. And guess what, folks? Within one tick of the exact high, it was a 382 that we're watching here. So very interesting here in the Treasury bonds. All right. Now I'm watching silver like a hawk, because as you can see here, we are setting really close to these big numbers up here, long-term weeklies and stuff. And I'm just going to see what happens when we get to this 35.22. We're only 20 cents away. You'll see the pullback this morning stopped right at a 382. This one stopped just a tad under 382. We're heading to there, folks, 35.22. And we're at 03. It's 19 cents. I mean, that's a heartbeat in silver. So that's one that you want to be paying very, very close attention to, okay? Now, if in fact we're going to have a bunch of things go wrong in the economy, and we're going to go to liquefaction, I think is what they call it. Anyway, here is the Treasury, our price of our soybean oil. This morning we had an ABCD pattern here at the 50%. It went up to the 61% retracement where it's setting here right now. That 61% retracement, as you can see, is 61% off of that high. It's 78% off of that high, setting here right where we are right now. Now, there's nothing wrong with this chart. on the daily basis, because you can see we've been making higher. We didn't make that move to the downside. We made the move to the upside, and that's what we're doing so far. Folks, if they're going to get Treasury bonds, liquefy them, then their food is going to get more expensive. That much I can almost promise you, because that's what happened to us before when we had hyperinflation. That food will be the one that will be moving to the next side. Okay, now there was another one on our watch list that we were paying attention to today, totally different than all these others, which is the, let's get the daily chart up so you can see it really quickly. This is the live hogs. And as you can see here, we did go up and hit our exact number here today at 79.20. That's where we are right there at that big number right here. We'll look at this on an intraday basis. You see it's done very little. We hit that number, backed off a little bit, and now there the number to sell was right here at 79.20, and of course it came down a little bit, the whole point. Now we're back at this level right in here. So those are just a few things. You can see the ABCD here a couple days ago, right on the bottom. Beautiful buy pattern right there, and I believe that was just a tad under the 382. I'm sure it was. Yep. The 382 was right here. It went to the exact 50%. And now we're still moving slightly to the upside. Okay. Now we have another one on our watch list that I think is important, which is live cattle, and we want to get that up here for us to take a quick look at it here. Also, there's going to be cattle, and we'll get up. We got to get up just a little. Oh, we're getting close, folks. Got to be patient for this one, but this is going to be a really beauty, because you're going to have a triple top up in here. We're only 4 cents away, so we could make that very easily. You see, all these retracements are very small here. That means it's still acting like it wants to go higher. And if you get to that level, you'll see at that point you're going to have a huge ABCD pattern setting right up there at this 193, 190, 270 level, up 4 cents from where we are. No corrections in here at all, folks. Extremely strong market coming in from that 786 low that we made right down here. Look how you make a lower low than the previous week, and then away you go. Virtually one little tiny 382 retracement here. We'll just pull it up to let you see it. Right there. There it is right there. There's your little retracement, have your little 382, and then away it goes. So that's some of the things that we're paying close attention to here today. I've already talked about a few of these other things, but let me get this out of the way. Jeff Huge from Alpha Insights will be our guest today, and we'll move this out of the way here with the bean oil, because that's pretty much taken care of. The only one we're watching, this is the one that has my interest right here, is this silver right in here. I happen to be long a little silver. I'm trying to squeeze it out the best I can up in this level right here. But whether it gets there or not, I know I raised my stop to down in here. I bought a little of it here this morning, because that was right at the 382 of this other low that we had way back here. Move it back a little bit more, and you'll be able to see that 382 really tells you where the market's going to go, folks. See, there was your 382 early morning. Okay, this was the 382 off of the one way back here. So that's why it looks like it's heading to 35.22. We're at 04 right now, 18 cents away. When this bell rings, I'll be a happy camper. So we'll see how it works, okay? All right, let's take a little break. 877-927-6648. Billy Ray Valentine, Capricorn.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we'll take a look at the crude oil. It's rallied $4 a barrel here since last Friday. We suggested that might happen because of the fact that we had these real strong levels of support. There was your first move. You made a little bit higher high, came back a little below the 382, just above the 50%, and the way it went, and you can see today we've completed an ABCD pattern right here at 72.06, the high being 72.12. Whether that means much or not, I don't know. It's a micro move, but that's what's happening with it right now as we're watching this thing unfold here. But it still looks, quite bullish if you want to look at it that way. All right, now we have a question about Mr. Appel. As always, we'll get it up here, take a quick look at it, and see what we're going here. I don't look, well, the only time I look at it is when they ask me for it, and we'll get up and take a look here at Apple. Should be making new highs. Well, not making new highs, but it's still, it's actually down on the day. It looks like, well, it's green, so it must have just turned green. Let's move to the hourly, and that'll tell us that it's just moved up on the day. Yep. There was a close yesterday, so we just moved into that zone here where it was down, and now it's up on the day. Still looking, relatively bullish. In fact, most of these things are still looking bullish. The only thing that's looking really still negative that we've been in for quite a while is the British pound. We sold this way up here to 141.10 level. We're trading at 129. We came down and took out 129.40. We rallied about 30 pips in here. All we've been able to do, you can see yesterday's rally stopped exactly at the 382 of the high. And when you make a new low, what you have to do is you have to recalculate the new 382 off of the high. So you go back to this one right here, and you'll see the new 382 comes in right here. So we could get up here, and it's still, quite bearish. All we've done so far is, do a little bit of action in here, which is really very, very little. Looking at this on the long-term weekly, you can see what's happened here now, folks. We think we're looking at something like this happening in the British pound. We sold it there. Okay, our stop is here, so that locks in about $1,000. It's up quite substantially more than that right now, and to the tune of about $2,500. But we are looking for the possibility of a move like this happening because this is such a long-term 786. As you see the weekly, we'll just bring it up so you can see it real closely. There was your 786 on the weekly. You can see how it all measured to that level, and now it's starting to head down. So we're going to see if that's going to be something that we can hang on to for just a little bit longer. All right? Okay, now we want to take a look at Tesla. Okay, I think Mr. What's his name? Mini Trump is probably going to relinquish his position at Tesla and become a secretary of the budget or something like that. See, it's back down again. We're hovering near these old lows, which is right back in here. It's still it's down on the day here too, so it's still acting relatively weak here on the daily basis, but that's probably because he affiliated himself with a political party, and it doesn't make any difference. As long as you affiliate yourself with, you're going to get some backlash from whichever side they don't like about you. So try not to get involved too much other than to vote. And as they said when I was back there in Terre Haute, Indiana, vote early and vote often. And by golly, unfortunately, my very first voting experience was a bad one. And I don't, I think I told you this. When I was 1960, I was voting for Kennedy, supposedly. And my dad said, go in and pull the hammer 7 times for Kennedy. So I went in and pulled the hammer 7 times for Nixon. My father didn't like me and vice versa, but that's what got him elected. Anyway, let's get on to something else. I don't want to talk about this stuff here. Let's get on to something that's really important. Okay, I covered the cattle. Okay, we're trading. It just made a new high in the 05 here, and there's silver. We're going to see if we're going to get up there or not, but we're close. We're only 18 cents away. I would think it didn't make that trip for no reason at all. Okay, now the S&P's backed off a little bit from the 382. Here's where we took out the previous lows by just 2 ticks right here, folks. Boy, there was nothing there. And boom, the rallies right up, stops right at the 382, right up here at 31.87. The high was 31.87. So hit it spot on. Whether that means much or not, don't really know, but that's what we're watching here as we're looking at this here so far today. We want to get Apple out of the way here, and we have a question about another commodity that I'm going to bring it up here in just 1 second. We can get it, and that is the wheat market. And just give me 1 second, and we'll have the wheat up here. And we're getting ready to, boy, we almost hit that buy level in wheat. Let's just see how close we came to it today. I haven't been following wheat, but boy, it sure looks like it hit an ABCD here. Let's clean this out a little bit. There's the number right here. We see we rallied 10 cents from this level right here. Let's see what the ABCD measured to as far as this has got to be taken out because it's drawn wrong. I'm going to go from the low up to the high, and there was the 50% level right in here. We've got an ABCD coming down, so this was pretty strong support down here at 85, and now we rallied up to 76. So it's acting like it could be ready to go a little bit higher. But what we need to do is look at it on the hourly basis just to see how much of a rally we've had so far. And right now you can see it's doing is making a 382 retracement here off of the high that we made right back there, right on the money. There at the 382 was a high off of this. So it's still bearish until we get above that. And then we'd be able to say, yes, that looks like it's going to be a good one. And then we'll know more about that when we get to that level right here. Okay, now we want to take a look at the dollar index because that's where, if anything goes wrong with these bonds, it's going to show up in the dollar index. Nothing like that is happening yet, folks. As you can see, the dollar index still looks really strong. If something happens that they stop taking our bonds, in other words, they take them, and then sure they're going down, but they still pay interest, and they're supposed to be, legal tender, which they are. But if they ever say, I don't want to take him anymore, then this is what will pay the price. This thing will just, boom, collapse, and then it'll be a really bad situation everywhere. You can see here's where we are on the long-term daily here, going back to way back in March. You'll see we're setting right at the 61% retracement right now as we speak, right here at 103.89. So this is where the fat ladies got, that's a woke thing, better not say anything, but there's where we are right now. So all we have to do now is we've got to go over and take a look at the euro, because the euro should be the upside down version of this. So we're going to go up and grab the euro right here, and bring it up. And on the downside, it should be setting, it's already below the 618, but we're measuring it off of two different things. And that's because we need to measure, no, we're not. Yeah, you see the euro is already below the 61% retracement, where the dollar index is still hanging in there. So this is telling you that there's other currencies involved here that are not playing ball. So it looks like we're still headed lower. The pound happens to be one of them, and of course the Australian dollar happens to be another one, and then we have the Canadian dollar. So let's look at the Japanese yen. We don't have time because we got Mr. Alpha Insights coming on here in just a second, and then we'll be right back. So stay with us, folks. 877-927-6648.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're with Jeff Huge of Alpha Insights, one of the smartest guys in the room, as old Thomas Jefferson used to say, or John Kennedy said about Thomas Jefferson, the smartest man, well, whatever it was. He was eating by himself. I can't remember the quote exactly. Oh, I know what it was. Anyway, listen, I contacted Jeff this morning, folks, because when I heard that thing on Bloomberg, I misinterpreted what I heard. I heard that the took $1 trillion for 200 years to get $1 trillion in debt for the U.S. And since that time, we get $1 trillion every 100 days. Is that correct, Jeff?
That is correct. Yeah, right now we're putting about $1 trillion on the balance sheet in new debt every 100 days. Wow. That literally set chills down my spine when I heard that. I don't know how long that can continue, but boy, that's... Let's go ahead, my friend. Please tell us what you're looking at. We got your equity scoreboard. We got silver making new highs, gold making new highs, so that's certainly all together. And let's see what the next one... I think that statistic you threw out there explains a lot of this. People ask me every day, why is gold and silver beating... Microsoft and Apple and all these tech stocks that, dominate the NASDAQ 100. And the simple fact of the matter is monetary inflation. I mean, the S&P posted another all-time record high on Thursday last week. And, it's kind of corrected a little bit since. The S&P's high was confirmed by the Dow, but it was not confirmed by the NASDAQ 100. That, in our view... as long as it's maintained, suggests that there's a change in leadership and a weakness in the market right now. And so our suspicion is at this point is there's, this kind of underlying bearish condition within the market based on this non-confirmation, and we need to be concerned about it. The odd thing is, of course, that, the S&P has been trailing gold and silver by, 744 basis points and 1,365 basis points, respectively, year to date. And if you look at the median U.S. stock, according to Value Line, it's barely above T-bills. And so, from our perspective, I mean, you've had this big contribution from the Mag 7. Most notably, it's been NVIDIA, and which made new highs the other day. But at this point in time, there's only two of the Mag 7 stocks that are actually beating the S&P year to date, and that's NVIDIA and Meta. And actually, Meta has given back a little bit in the last, 48 hours, so that may have changed. But, Tesla, for example, is actually down over 11% year to date. It's trailing the S&P by 35 percentage points. Wow, that's a lot. Now, you got a picture of The Economist here with the dollar bill on it. Boy, is this like Time Magazine? Whenever you see it on The Economist, it's pretty close to over. Yeah, well, my longtime hero in the market was a guy by the name of Paul McCrae Montgomery. Oh, and Paul created this indicator known as... Yeah, Paul created the magazine indicator back in the late 70s, early 80s. And usually it's Time Magazine that you want to be nervous about. But, the Economist is renowned for its poorly timed feature reports, right? So, when the cover, this was the October 17th cover issue of The Economist, shows a picture of the U.S. dollar and says the envy of the world. Well, what it was actually at the heart of this whole thing was a 7-chapter special report written by Simon Rabinovich and Henry Kerr. And what they said is they're looking at the U.S. economy and how it's left other rich countries in the dust. And they're arguing that this relentless dynamism of the U.S. economy, it's the essential characteristic that's driving it forward is kind of our dominance of technology, right? And as all will know, this has been the case for many, many decades. It's not new, right? This isn't some new revelation. The U.S. has dominated in technology for 40 years, okay? So the fact that they're finally putting this on the cover and making such a big deal out of it should suggest that the trend is very close to its end, or it has already ended. Yeah. And so the question I would ask is, could it be marking the end of U.S. economic supremacy? I think it's a worthwhile question. Yeah, it certainly is. I remember Time Magazine, one of my favorite things was Pete Rose. He was the Man of the Year, Time Magazine. 6 months later, he was banned for baseball for gambling.
I mean, within 6 months, his whole career was over after hitting 4,200 base hits, exceeding Ty Cobb. Boy, that's truly amazing. Let's move on here to the gold and the SPX. This basically shows the relationship here that we've got going with gold being so much stronger. Is that correct?
It is. And, during the last two easing cycles, that being not the pandemic, but the 2001 and 2007, which were economic easing cycles. They weren't, a calamity that caused them initially, right? This was after the Fed led these cutting cycles with 50 basis point rate cut. And that was one of the only two times that they've done that in the last 30 years. Of course, the most recent time is last month. We did another 50 basis point cut. Well, if you take a look at the last two times they did that, the ratio of gold to S&P blasted off. Okay. I mean, we saw these huge upside swings where gold outperformed equities for the next 12 months by 1,700 basis points or 2,000 basis points. This is 17 to 20 percentage points of outperformance, respectively, right? So, by some measures, I think optimism towards stock right now has never, ever been greater. I mean, for example, the percent of household assets allocated to equities today is the highest in history. Meanwhile, optimism for gold is non-existent. Nobody even talks about it on CNBC. But I would say with history as our guide, I think that stocks are setting up to significantly disappoint investors over the next year and perhaps much, much longer. So, we've been advocating gold, as you know, back on, I think, December 27th. We called gold our top actionable trade idea for 2024. Mid-year this year, we came out with a report, and we may have talked about it on one of your shows, but we called gold our top trade for the next decade. And we put a $8,100 target price on gold. And I am confident that we will get there. $8,100. $8,100. That's our target. Yep. So round it down to 8,000. I think gold's going to 8,000 or higher, probably by the end of this decade, but maybe over the course of the next 10 years.
Wow. Boy, that's one hell of a move. I won't be here to see it, but by golly, I'll certainly want to watch it. Let's take a look
by the end of the decade.
Here we got
if it happens by the end of the
let's see
decade,
something we got on election stuff. This is something we usually don't cover here, but let's go ahead and do it. What are you looking at here?
Yeah, and hopefully you got my chart on silver too.
Yeah, we got
it. That's my most important chart.
We got to take a break here to pay a few bills, Jeff. Stay with us, folks. Jeff Huge, Alpha Insights. Don't want to miss it, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, You don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we're talking with Jeff Hughes. He's going to talk to us about the election tax facts. So please tell us what you're looking at here, Jeff.
Well, this is just really an indication of what's at stake here with this election and how it's going to affect, companies in the S&P 500, for example. And, Harris has talked about hiking tax rates from 21% to 28% on corporations. That's going to be about a 5% hit to EPS. And if we look at the forward 12-month consensus estimate on S&P earnings, today it's $265. A Harris tax hike would bring that down to about $252. So it would basically make the S&P 500 more overvalued by 5% relative to where it is today. Under Trump, he is suggesting he's going to cut taxes further from 21% to 15% on corporations. That would actually be about a 4% reduction in the corporate tax rate across the board. And that would boost earnings from $265 to $275 in the forward 12 months, assuming that they would immediately put these into effect. That's debatable.
Okay. All right, let's go back and get off of politics and talk about the foreign market leadership. And looks like the Chinese is leading the way right now.
Yeah, no doubt. And what we've done here is we've just shown kind of the relative performance of all these various major markets, the S&P 500, emerging markets, the developed foreign markets. And we can see that emerging markets and foreign markets have been lagging the S&P and lagging the overall world market because it's so dominated by U.S. companies. But what's different here is that China has basically launched higher. It's blown away everything over the last 4 weeks or so that we are looking at here. And this is a direct result of Chinese political support for their real estate market and their stock market through both monetary and fiscal policy. They launched the largest policy support package or economic stimulus package since 2015, back on, I think, September 27th. And that has really caused Chinese stocks to fly.
Yeah, I see it here on the next chart here, showing it's had a pretty good sell-off, but still looks quite bullish, doesn't it?
It does. And as you know, Larry, we look at a lot of markets through the lens of the Elliott wave principle. And so, what we can see in this chart is that the first move over the course of the, say, first several months of this year was 5 waves up. And we count that as wave 1 up. And then we saw an ABC, a 3-wave corrective waveform that looks like wave 2 at intermediate degrees. Since that time, and that was the August 5th low, we've seen stocks take off in 3 waves, which we count as 1, 2, 3. We think this pullback that we've seen is actually just minor wave 4. It hit the 38.2% retracement. We had kind of gone out on Twitter with this exact same chart saying that we thought the buy zone was $30 to $32, a point above, a point below, where the 38.2% retracement was. And we basically hit it perfectly, just a little bit below. And now it looks like we're rallying back. I think a breakout above this 10-day exponential moving average will seal the deal. And I think the next move to the upside could carry prices for the FXI China large cap ETF up to around the $40 to $42 range. We'd use a hard stop loss at 29 just to protect capital. But as you can see, the stochastic shows it's deeply oversold and has turned up. And I think we're ready to see this thing take off.
Yeah, it certainly looks like it. That's for sure. Now, tell the folks about your newsletter.
Well, we publish a monthly newsletter. It's called Huge Insights, The Big Picture. It's available on Substack at hugeinsights.substack.com. It's free to subscribe, and we send out the first 4 or 5, maybe 6 pages of our commentary for free. And then there's a paywall. And for those who want more, you can get into what our real analysis of the market is. And so we do some very deep, detailed analysis on a variety of different U.S. and foreign markets. And we have a very specific positioning and model portfolio that we're addressing regularly. Our paid subscribers actually get a weekly publication from us called Alpha Insights Idea Generator Lab. It's an institutional report that's typically reserved for our large institutional subscribers from our main service, Alpha Insights. And this actually gives some updated market commentary, updated sector rotation commentary, and our top actionable trade idea every Wednesday after the close. And most recently, we recommended silver. And silver is now breaking out, up about 7.8% last week. I would just point out that the base in silver looks like a very large degree, multi-decade cup and handle type base formation that is now resolved to the upside. Now, there's no doubt that we could get a pullback. We're up another 3% today. It's just going vertical. I would buy silver on any weakness. Our longer term target price, intermediate term, we think silver based on the SLV could go to $36 to $40, but longer term, we think it could go to 100 or higher. So we think this monetary inflation that's underway right now is showing up in the precious metals first, and we think precious metals are going to fly. I said 8,000 for gold. I'm saying 100 for silver, but I think those targets are conservative.
Wow, that's really good. Hey, listen, thanks for having you on today, folks. Tell the folks I'm going to get this up here so you can see the how to reach you. You got your website is www.jwhinvestment.com. On Twitter, you're at alpha/insights, and then on Substack,
alpha
huge insights, substack.com.
Yes, that's absolutely. Thanks a lot for having me on the show today, Larry.
Oh, listen, it's our pleasure. We'll have you on again in a couple of weeks. Really great stuff as always, Jeff, and thank you so much for
just one last
being
thing.
on the show.
One last thing,
sure.
if your listeners want to take a look at our Substack, I will offer a special rate for any listener of Larry's show today. Normally, we charge $180 for an annual subscription. I'll do it for $99 for anyone who sends me an email and says you heard me on Larry's show today. I'll send you a coupon, and you can get the newsletter for $99 for an annual subscription.
That's a very good deal. Thank you so much for joining us, Jeff. Okay?
You're welcome. Take care, Larry.
You bet. Okay, folks, we've got another, how much time we got left before we got 1 minute and 9 seconds, so let's get back to look at a few things. Let's see how our silver is coming. We're almost, where are we? We've got, we've had a big run up here. Would have been stopped out of the 382 here in the, this because we've already gone 50 points above it. See, there we went to 30, backed off only 40, 50 points, so you should be out of your 382 now on the Dow Jones here because it stopped exactly right there. As you can see, it only back 40 points, and now you're against it $50. I would say you just got to get out of that. Get out of that and not worry about it too much anymore, because the S&P has already exceeded our number. See how it popped up above here? These markets are acting very bullish, so there's no reason to stand in front of this level right here, because who knows where it's going to go. Once it took those lows out here, folks, look at that. If you look at that on a 382, there it was right there, folks. I mean, there was your 382 on the Dow Jones today after that big run. So nothing bearish about this. Let's take a break here.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the long-term monthly chart on silver. The number we're looking at here is 35.32. High event today is 35.07. We're 35.04. Looking at this on a really short-term basis, you can see we're still heading up. And if you look at this on just a really quick ABCD on a thing, you're going to see that we should make that level without any trouble at all up there at 20. That's there. If I can see, there's where my order is to get out. So we're going to see if that's going to be if that's going to fulfill. If I put my stop down in here, that protects something. So anyway, we've got a pretty good chance of getting there. We're still 2.5 hours to trading and certainly not backing off very much. You know, that's absolutely for sure. Okay, now let's move on here to the other one. Well, you can see here's the S&P. We went above the 382. You see here we backed off just a slight 60 points, 60 points off the high, not even 60, 40 points off the high. And then once you went above this was telling you that there was something wrong right here, and away it went. Now, this is really short term, folks, but this is what I do when I'm watching these to keep my losses absolutely as small as possible. Watching this morning, just now, this is just this morning. This was after we made new lows on the day. You see the first pullback went a little below the 382. Then we had another one just backed off here. Remember, this took almost a half an hour to make that level. And it, again, was setting right at a 382. You'll see it just come right down within just a heartbeat of the exact 382. And that's why it's telling you it wants to go higher. Now, I do that because I can, put my stops in so I don't have to risk very much on these darn things. And that's the key. It's not how much money you make. It's how much money you don't want to risk. So we're still quite a bit below. We had a sell signal on this, if you remember, at 43,570. That's still 300 handles from where we are right now. That was based on the long-term weekly ABCD right there, boys and girls. And look, we went down and took that low out by a hair and didn't go anywhere. Ooh, that makes it rhyme. I was a poet and don't know it. Make it rhyme every time. Live every day in an attitude of gratitude. May God bless. I'll see you on the flip side tomorrow. Hopefully our guest will be Jim Bartolione. See you later, folks.